Your mortgage hasn't changed, so why are your payments choking you? Today, I'm really going to show you where we are headed. The collapse isn't loud this time. It's slow, it's silent, and it may already be here. Taxes are exploding, and if you think you're protected because you bought in early, that won't save you now. This isn't 2008. It's worse in some ways. Homeowners are losing their jobs. They're losing ground. And for many, it's becoming impossible to stay afloat, even with two incomes. Here's really what's happening. If you have an escrow account or if you have a fixed payment, you might have realized that your payments has skyrocketed. The escrow account that has insurance and property taxes and mortgage and interest has skyrocketed because property taxes have skyrocketed. Insurance has skyrocketed. Homeowners association has skyrocketed. So your payment is no longer fixed. And a lot of the homeowners that bought 2 years ago, 10 years ago, even 15 years ago, even 25 years ago, like I did, my payments have skyrocketed, even though I had fixed mortgages. Another thing that is happening, especially in 2025, is a lot of the homeowners who bought 2 years ago, 5 years ago, 10 years ago, amassed a lot of equity. And now they're seeing their equity vanish. Why is that? Well, because in a lot of states, a lot of cities, a lot of counties, home prices have actually dropped. In a lot of cities, drops are as much as 5 to 10 to 30%, especially in Florida and Texas, where there were areas that are disaster prone. There were some damages and the HOA has gone up, expenses have gone up, and homeowners cannot sell their home. They cannot afford to stay there, and they are cash poor. The equity that they had is slowly diminishing. As home prices go down, as everything else goes up, they're borrowing from their equity and they're losing their profits that they have amassed. So let's see what's brewing in the next few years coming. To make matters worse, you might have noticed that inventory nationwide has skyrocketed this year. They're up anywhere from 5, 10, 20, 30, up to 40% more. That's because the buyers are choking as well. Buyers are saying, enough. I don't want to pay high prices. I don't want to buy higher mortgages. I don't want to pay moving costs, which are expensive. And a lot of the buyers are holding off and not buying anymore, which adds to the inventory, which adds to the difficulty of homeowners who really want to sell. They cannot sell anymore. So they are stuck. On one hand, they want to sell and move on. On the other hand, they can't live in the house because it's too expensive for their mortgage payments, for the upkeep, for the maintenance. So there's a standoff going on right now between the buyers and the sellers. Where are we headed? Furthermore, the buyers have become smart. Not only are they asking the sellers to reduce their prices, but they are also asking for closing costs. They are asking for repairs or credit towards the repairs. Because there is so much inventory today, they can do that. So are we headed for the buyer's market? In some areas like Florida, it is already a buyer's market. In Texas, a lot of areas, it is already a buyer's market. And here is the worst part. If you stay, you're still bleeding. And if you sell, you're not safe. So what do? A lot of the sellers who want to sell cannot afford to buy another house because prices have gone up. Insurance has gone up. Home prices they bought 5, 6, 7 years ago were much cheaper. So they can't afford the newer homes. And when they sell, they lose their equity because the prices have dropped. There's commissions to be paid. A lot of homeowners have a lot of capital gains, so they're paying capital gains taxes. And before the sellers sell their home, they may have to do some upkeep or some repairs or some remodeling to sell. And they cannot do that because, as I mentioned earlier, they're cash poor. They don't have money to do that. Or they're pulling out money by refinancing or getting a home equity line of credit. So as they do that, they diminish their equity again. So again, when they sell, that reduces their down payment. So they are choking. They can't sell and they can't stay. Another sign that the buyers are backing off is if you drive around today, I'm sure you've seen lots and lots of open house signs. That's an indication that homes are taking longer and longer to sell. Furthermore, a lot of the banks are offering more. They are offering the ARM loans, which is the adjustable rate mortgage loans. Yes, they are back. In fact, there are banks. I heard of a bank that is offering a 1% interest rate And also they're offering 1% down payment, and they put in the other 2% down payment to get that FHA loans. So when the banks become desperate, just like they were in 2002, 2003, 2004, they came up with these toxic loans. They qualify you at 1%, 2%. They gave a lot of adjustable rate mortgages. They eased up on their qualification. It used to be that you must have 640, 650 FICO scores. But last year, a lot of the FHA loans, or 2 or 3 years ago, they were taking lower credit scores to give them a loan, and that's coming back. This is an indication that the housing market is slowing down. Buyers are becoming very cautious. They are not buying, and that is making the sellers staying put over there. Sellers want to sell. They can afford to sell and buy. Sellers cannot sell because buyers are not buying their homes, especially in Florida, in Texas, in Denver, in Philadelphia, in Chicago, a lot of areas, a lot of the places like Winter Haven in Florida. There's a lot of Airbnbs that are vacant because homeowners are selling because they cannot afford all these higher taxes, all these higher insurance, all these higher HOA. So a lot of places where there are investment properties, Airbnbs, Palm Springs, Joshua Tree, Tennessee, Big Bear, Winter Haven, you name it, all those are coming on the market, flooding the market, lowering the rents, lowering the prices, and yet they cannot sell. So are we going to see a repeat of 2008? Well, not too soon. One of the things that happened in 2008, the market did not crash like that. It did not come on day one. It took time. It took 2 years, 3 years, 4 years, 5 years to develop it into a recession. So are we at a starting point or at the ignition point of a new wave of foreclosures coming? Or have we already passed the ignition point? Maybe it was in 2024, and now we are seeing the repercussions of buyers choking, sellers not being able to sell. And are we going to see 2026, 2027, 2028, where we will be flooded with foreclosures or defaults or non-payments? Let's see what happens. In fact, some cities like Punta Gorda, Cape Coral, Fort Myers, Northport, Sarasota, Naples, Panama City, a lot of the cities, especially in Florida, have seen a lot of price drops up to 10%. Florida overall, the states with the most metro areas seeing year-over-year home price declines are Florida, Texas, Louisiana, Arizona, and Colorado. So, has the small wave of foreclosures started?
I don't know.
Another indication where the housing market is slowing down in certain states they are still strong, like Southern California, it's still very active. But specifically going back to Texas, going back to Florida, there are so many overbuilt homes that the new builders are giving incentives up to $75,000. So yes, if you are a buyer, you may want to go to those states and get 50, 60, 70,000 in incentives or credits, or they pay the first year's homeowners insurance, or they pay the first year's property taxes. But be careful, because these are the very states where the property taxes has skyrocketed, the insurance has skyrocketed, HOA has skyrocketed. So yes, it's cheaper to buy there, but be warned, because those prices and those property taxes may still keep going up. So this is an indication that the new builds are slowing down. They are unable to sell the homes at a good pace. In fact, in Florida, Texas, and a lot of other states, again, I keep repeating the states, but I'm trying to drive a point here. A lot of the builders have canceled or reduced the number of homes that they're going to build. Permits overall in these states have dropped significantly for new builds. Let's talk about unemployment. Is it up or down? Unemployment is low, but layoffs are happening in tech, in logistics, and trucking. A lot of the farmers are losing their crops this year because of immigration, because of mass deportations. Farmers are hurting. Two-income households are one income away from default. In fact, many of them are already in default. In fact, in 2025, there are up to 2 million homes that are in default or are delinquent on payments or are unable to make these payments. And that number is rising as we go along. And also that is happening on conventional loans and on VA loans. Skyrocketing home prices, skyrocketing expenses, skyrocketing everyday cost is choking the average home buyer and the average home seller. It's not about job loss. It's about life events, divorce, illness, job cuts. This pushes everybody to the brink. In preparation for tough times coming up, what can you do as a home seller or even as a home buyer? Especially if you're a home seller, a couple of things you can do. Look at your escrow account, look at your numbers, your property taxes, talk to the escrow company, talk to the lenders and the realtor. See if you can adjust those payments, see if you can reduce those payments. If your property taxes are too high, appeal those. If your insurance has skyrocketed, get more quotes and see if you can reduce it. If you have to do an upgrade on your HVAC or electrical or your roof to reduce your insurance, you may want to do that. So these are some of the things you could do. A lot of the homeowners that I talk to reduce the drastic insurance policy rates, they are increasing their deductible, so that drops their payment. There is no choice, but you may want to do that. Also, you may want to call an appraisal, do an appraisal, and dispute and appeal to the county for the appraised value that the county is giving you versus the appraised value that you have. Another thing you could do is start thinking about what your exit strategy is. Are you thinking about selling, or have you thought about selling and just waiting? Prepare now. Maybe you want to move up your timeline. Sell now before your city, your county, or your region gets hit with price drop, gets hit with inventory increase. So you may want to move earlier than later. You may want to think about downsizing. You may want to think about selling and moving to a different area if that is possible. If you cannot do that, you may want to think about renting your room or renting 1 or 2 rooms so that you get additional income. Of course, you have to be very careful how you do it. You have to be cautious about your lifestyle and who you bring into your house. But a lot of people, even in Orange County, I know so many homeowners that have 3, 4, 5 bedroom homes. Kids have gone to college or graduated. They're not coming back home. So these couples, elderly couples on fixed income, are renting out their rooms to students or newlyweds or new careers that they're starting and getting some income from up to $800 a month, $1,000 a month, or up to $1,500 a month per room, which helps them on their payment, which helps them on their maintenance, which helps them on their daily living. So if you can do that, and if you're able to do that, that's something you may want to consider. And another thing to do is, if you are thinking about selling and if your house needs work or updating or bring the curb appeal up, you may want to start doing certain things slowly but surely. So when you are ready to sell, you are ready to sell. You may want to start decluttering, taking out stuff you don't need, fixing little things like locks and screens. Maybe you want to paint. If you cannot afford to have it done, you may want to start doing it yourself, because everything is expensive. Maintaining a house is very expensive. Updating a house to sell is also very expensive. But the homes that are priced right, the homes that look well, present well, and are moving condition sell much faster than homes that need work. And the homes that need work end up dropping their prices. And the states and cities that I mentioned, a lot of the homes that have been listed at a certain prices are actually selling less than the list price. So be prepared for a price drop if you feel you want a certain amount of money, or bring your house up to par so you get what you want. This isn't fear mongering. It's real closings and real families I talk to every week. If your payments just jumped, don't wait until your equity vanishes. Let's run some of your numbers. I can help you with that. Direct message me or drop a comment below, or I can refer you to a local agent. Thanks for watching. Sell smart so you can gain more. I am Mike Patel.